What's up, everybody, and welcome back. It is July. It is another month of the Arizona housing market update, the monthly update, that is. This is Katie and
Matt and
Ryan. Welcome, everyone.
What's up, team? It's been a month since we have met last. So let's catch everybody up. Let them know what is going on as we move into these warmer days of summer. Last month, we predicted we were going to feel a little bit of a slowdown, and we did, didn't we, Ryan?
Yeah. With rates, that's going to have a big impact on things, of course. So, just kind of a quick update about what's going on. June was a relatively good month for mortgage rates. They saw a drop since the recent highs that we were kind of getting at the end of May. And one of the reasons for the drop was better than expected inflation numbers. And as we talk about a lot, lower inflation usually means lower mortgage rates. And also, jobless claims have been rising. They were at the highest reading the past 10 months. So unless money is being made, there's going to be less spending. And this was actually confirmed with retail sales as well. It was very slow over the past 6 months. So less income, less spending really pressures rates to lower as well. So it was good things last month in a mortgage rate perspective. And if this continues, it'll really pressure the Fed to cut the funds rate, which everybody's, eagerly waiting for. But, most are predicting this will happen at least once in the next 6 months. But July hasn't been off to a great start as we lost some of that progress we made last month. And rates actually took a jump on July 1st. And it's, some say it's, the Japanese yen that was weakening or the French election or our debate here in America, or the fact that we're only getting one Fed rate cut when a lot of people were hoping for more than that. So, long story short, there's a lot of factors that come into play with mortgage rates, and you never can predict about how something in Japan or France could actually really impact our economy, but it's all connected really. So we're hoping for things to settle in July and get back on track, because we really are expecting spending and hiring to remain slow. And that's going to continue to be the main factor in pressuring rates lower. And I got a live update just a second ago. I just peeked at it, but there's further signs of a slowing economy. So this just in, this is good for rates because we got kind of an estimate of Q2 gross domestic product, which again is really just a measurement of the health of our economy, and is expected to come in much lower than expected. So rates are improving right now. So maybe July is looking better after a bad day on the 1st yesterday for us. But that's what we're hoping, getting back on track.
Right. And that was a bit unexpected, right? I mean, we all expected to see something different happen, and it didn't.
Yes.
Can you jump into that just a little bit?
Yeah, because we did get the lower inflation numbers that we were hoping for. It's nothing substantial because the rate that we're seeing declines are slowing because we saw such a big decline last year. So the average really is just kind of being a little bit more stagnant. So people are hoping for bigger numbers, but we're dropping by maybe like 0.1%, year over year. And then other things sometimes could take a back seat to that, like I mentioned, like what's going on with the elections in France and the Japanese yen. There's a lot of things that come into it, but that could sometimes, over a course of a couple of days, maybe jump rates. But, the long-term trend is going to be lower. And that's kind of even showing right now as we are expecting the gross domestic product to come in lower. So we're kind of getting back on track today. So
Got it. Yeah, it was quite an interesting week. So you mentioned we had our first debate. So everybody, unless you're living under a rock, you know that it's an election year and we're coming up on November, right? So I'm starting to have these conversations with our clients, and they're starting to ask, elections are coming up. What do we do, if anything? Does this impact our buying? Does this impact our selling? Does this impact rates? All of that stuff. So I'm looking to you guys to answer that for our audience. Again, we're just starting to have these conversations because, like the debate probably sparked it, is my guess.
Yeah, and rightfully so. It's one of the earliest debates we've seen in our lifetime, and they're usually a little bit later on in the cycle. And so I think that's definitely stirred things. I think that the nature of politics nowadays seems to be, I don't want to use the word toxic, but it seems that way. It seems very divisive, and we're really, really dividing people. And I think we're seeing it now more than ever. So when you start to see that, and people are, taking these tactics to ultimately just call one president's evil and the other president's evil, and we're like, oh my God, both these people want to destroy the world. And it's, how do how do you pick from that? So I think naturally a lot of people are just fearful, and we're seeing that as consumers. As I look at it and I see everything that's kind of transpired over this last year, they've always said, politics shouldn't have any effect on our mortgage rates. But I do seem to see this, pretty convenient. And I do think we're going to see rates drop, and it's probably going to be favorable to the elections. It's probably going to give those consumers that are full of fear a little bit of ease. And it's probably going to be on the back of exactly what you said, some unfavorable, job reportings, GDP, all these things that are, telling us that our economy is slowing. But it's what we want, and that's where it gets really funny when you start looking at the power of words and what they represent, and how you don't want to use the word recession, and where is the the fine line between recession and depression. But then we also have inflation, and they say, hey, when we have inflation, we need to have deflation. So what's the difference between deflation and recession, and how can those be used in a way that's going to either promote confidence or fear? And your guess is as good as mine. So I definitely think we are going to see a rate drop, and it's probably going to be in the next, 3 weeks to a month is my guess. What's your thoughts, Ryan?
Yeah, I think we are going to continue to see signs of the economy slowing, and jobs reports coming in lower. And it's bad news for the economy. Obviously, we don't want to see that, but it's good news for mortgage rates, because that's really going to signal the Fed to say, hey, listen, we've kept our funds rate higher. Borrowing money has been higher for a while, and they've done their job. They've really dropped inflation significantly over the past 12 months, but you don't want to overdo it, and you don't want to grind the economy to a halt. Yeah. So really what they got to do is just time it just right. We're like, okay, we'll start cutting back the funds rate, and that's going to trigger more spending. But like you were saying, Matt, the thing about election years, there's a lot of uncertainty. People don't know who's going to win, or what's going to happen after they do win, how it's going to change things. So I think we're kind of seeing that a lot right now, where buyers are definitely more on the fence. I'm hearing that word again, where I'm like, we might wait till after the election. So, and I'm sure you guys are kind of hearing that too a little bit right now, because we have seen, I know summertime sometimes slows down. Obviously, people are taking trips. It's going to be too hot to be moving. But on top of that, that's definitely one of the things I'm hearing for people putting their home buying on hold.
Absolutely. Yeah. And we're getting asked right and left because, of course, we're coming up on the second half of the year, and that is the big event that's happening in the second half of the year. So we've been getting a lot of questions about that. A lot of first-time home buyers that aren't really sure what they need to worry about. So, I mean, and this I totally get that I'm putting you on the spot, but for a first-time home buyer, what are the things, guys, that they should be concerned about when it comes to market news, when it comes to what they're seeing, hearing, and reading?
Yeah, I think what's interesting is if you kind of look at our home values, because we are seeing inventory picking up a little bit right now. And we do have a lot of first-time home buyers getting some better deals out there because there's a little bit more inventory and they have a little bit more power in the negotiations. But I think it's interesting, we're still historically very low. If we look, nationally, I was kind of looking at the numbers last night, and we're high compared to 2021 and 2023, but we're still very historically low for pre-pandemic. And what's interesting is, as of May, the median home price nationwide was $419,300, and this was the highest ever recorded by the National Association of Realtors. So I think that just goes to say, even though we saw historically very high rates last year, and they're still elevated, it just shows you the strength and of your investment of buying a home. Is that we're still at historical highs given everything that we've been through over the past year.
Absolutely. And I am hearing it from colleagues in other areas of the state as well. For instance, out in the Snowflake area, I was just talking with an agent that has some listings out there. She said she can't keep anything on the shelf. It's ridiculous. They have literally zero inventory there, which blew my mind because that's just a little teeny tiny town kind of in the middle of nowhere, you know?
Yeah, very northern Arizona. Yeah.
Yeah, but they're building like crazy,
Yeah.
and their inventory levels are just ridiculously low.
And
Go
that's
ahead.
what we're seeing. That's ultimately, what we're seeing, the perfect, almost a balance of inventory being the driving force to keeping prices where they're at, because there's just nothing to choose from as a new buyer, nothing really motivating you to make that big change. You have the lock rate fatigue where people are like rate lock, where they don't want to give up the rate that they have, and they're really trying to justify, what's going to be that motivating factor to get them to change and give up that low rate. So, and it's definitely there, but
And
I
what
think
I'm seeing, oh, sorry.
okay.
What I'm seeing, just to speak to that, is more of the same of what we've been saying over the last couple of months. The majority of our listings, people that are selling for a reason. They need to move out of state because they got another job, or they choose to move out of state for XYZ reason, be next to family, whatever it is. It's not, we do have some that are essentially trading, right? So they're selling theirs and buying another one and staying local. We do have that. That is happening. I don't want to say it isn't, but the majority is because they have somewhere to go because they need to.
Yeah, 100%. That's a big factor, and I think the other side of it is this is we're especially our generation, we are literally witnessing, inflation reset. If you look back historically, when we were younger and right before we were born, there was definitely some big jumps, and this is the first time we're actually seeing it, feeling it, and I think, as much as we say, oh my God, look at the price of homes, and then you look at the rates, like you just said, how they were historically high last year and they retained. So that says at some point that people can afford it. And that just shows us that inflation is real and it's here. It's going to be tighter on people. But it's not like, hey, these prices were super artificial and this is something that's going to be really causing some grief. No, people can afford it.
I
And I
see
think
it.
that's why it's a new baseline ultimately
Yep.
of pricing. Um,
Here's the, sorry, I keep interrupting you, but
it's okay.
you know it. Here's the, you know how I am. Here's the main conversation that I'm having, Ryan. I wonder if you're having the same one. I'm actually curious to know. They are getting pre-approved, and they're getting pre-approved for a certain amount. They just don't want to pay that. It's
Yes.
not that they can't. It's not
Correct.
that they can't afford it. It's not that they're not qualified for it. They're just like, man, no, let's go lower than my budget. So
Yes.
that's the conversation that I'm having more so.
Yeah.
Yeah, we're seeing a lot of that too as well. I think people are a lot more budget conscious right now.
Yeah.
Because we always try to do two different approvals. We're saying, okay, what's the most you can qualify for, and what are you comfortable paying? And I think you're right, Kate. I definitely see people more kind of taking a cut, which is tough right now with home prices so high. Kind of finding what you want and keeping it at your budget at the same time is pretty difficult.
That's the thing,
Yeah.
right?
Yep,
And
it's a tough balance.
that right there is back to what you were asking before about like what should first time home buyers really be focusing on as far as, their metric or whatever, their guidelines are for purchasing a home. And I think what ends up happening is I think a lot of people look at real estate and they look at it as an investment and they're trying to find this perfect time to buy, and there's no perfect time. You got to think about how many professionals are out there dedicating their lives with MIT degrees and the most crazy technology trying to pinpoint the right time, and not even they are successful. So when you are just a regular citizen and you're just looking to purchase, you're going to exhaust yourself by trying to now look at this as an investment. What you really need to look at is exactly what Ryan said. What is your comfortable budget? What is the high to that? What is the low to that? And how do you expand? And you stay within those points, and then you say, okay, can I get what I want in that price point? And then that's really where you win, because if you're buying a home for yourself, that's going to be, satisfying those emotional needs, whether you're getting that extra bedroom, whether you're getting the fireplace or the good sized backyard or the RV, those things that you can now choose from because there is a little bit more of a selection out there. And that's where you're going to win. And I think as long as you stay within, your budget and you do this right, then, you know, I wouldn't really focus on the noise, on, oh, the perfect time to get the lowest rate or at the very bottom, because you're probably actually going to shoot yourself in the foot.
100%. I totally agree with that. And something that you said cued another conversation that I often have with especially first-time home buyers. Your first home is not the Taj Mahal, guys. Like, you're
Yeah.
not going out for, this isn't the end house, right? This isn't the forever house. Matt and I know this very, very well. We've lived in a lot of not forever houses to
Yeah.
get to that point, right? It's building. You're building equity. That's how people do it that don't have oodles of money in their pockets ready to, you know, throw at property at any given moment. That's how people do it.
100%. And I think, but you know, you look at the nature of America and how everyone is, materialism is at an all-time high with all social media and, you know, the dreams and I want, and, you know, and it's naturally pushing people to live way beyond their means.
Mhm.
And that's when you're becoming a homeowner, especially a first-time homeowner, and you do have worries about finances. You know, you're doing this on a budget. You've got to really look at the big picture, and I think the big picture here is not so much changing the outside and really trying to get this Taj Mahal and really make yourself a better person and grow from things that are on the outside. No, it's really changing things that are on the inside. And that's where you really need to look at yourself and say, I've got to live below my means a little bit. I think when I go and buy this home, I do need to be a little bit more conservative. Maybe I need to buy something that I can grow into, but it's going to need some work. And that's why I'm not going to pay a premium right now. And really think about it, that you're going to set yourself up so that when you do purchase this home, you're not putting yourself in a bad spot, that you're going to have buyer's remorse, and that you're really able to kind of get the sense of home ownership and grow. So then the next time you go to purchase, you're going to know that you made a good decision. You're going to be able to reflect on those right choices or the wrong choices and be even more bulletproof on the next one.
I totally agree. And one thing that I don't want to go before we're able to ask Ryan about, because it goes in with this conversation, there's a new down payment assistance program out. Yes?
Yes, there is. Yeah, I'm glad
Can you
we're
tell us a
talking
little
about it.
about it? Yeah, I
Yeah.
know that it's been quite a hot topic. So for
Yes.
those that maybe haven't heard about it yet.
Yeah, I'm glad we're talking about it. It's located statewide here in Arizona. It's called the Arizona is Home. It's only available for first-time home buyers, which means you couldn't have owned real estate in the past 3 years. Sounds weird. You could be a first-time home buyer if you bought before. You just have to sell the home, not have owned for the past 3 years, and you're back as a first-time home buyer. So, you know, there's some income restrictions to this one. You know, if you're at 80% or below the area median income as a family, which is about $81,000, you can get up to $30,000 to help cover down payment, closing costs, and even interest rate buy down. So, and even if you're at 80% or over the median income, which I think is close to 120,000, you can still get up to about $20,000. So it's a
Wow.
great program. You just have to take an 8-hour home buyer education course, and they do want you to have a one-on-one with a HUD certified ownership advisor. And the grant, it's called a silent second, which means there's no payment on it, but the amount does need to be paid back whenever you sell or refinance. So that's one of the drawbacks of it, is that it does have to be paid back. So when you sell or refinance, you do want to make sure you have the equity in there to pay that back. But all around, it's a great program, you know, just to get the cash to cover the down payment. And as you guys said, just to kind of get your foot in the door, you know, and it doesn't have to be your forever home, but just a house that gets you in and building equity. Because one thing that I do notice for people who do wait to buy, and I talk to them 6 months or a year later, they talk about how anxious they were to continue to see the news, continue to see home prices go up regardless of what's going on with interest rates. And you don't want to be that person sitting on the sidelines. You know, you want to take advantage of these great programs that are out there.
I 100% agree with that. Thank you so much, Ryan, for always being the one with the knowledge and the ideas for our clients so that they can get into a property and start being a homeowner, because I think it's important to start sometime.
Yeah.
It's important to start sometime. All right, guys, for my sellers out there, I just want to let you know that it is not all doom and gloom. Chandler is still the #1 sellers market out there in the greater Phoenix area. And we are still seeing properties that are in good condition or in the right condition for their price. Okay. Both of those are really important. We are still seeing those properties move. So I don't want you to get discouraged at all out there. But that's what's going on. Anything else you guys want to add?
Have a happy 4th of July.
Yeah, absolutely. I think that's a good message, and safe.
Yes.
Awesome, guys. Have a happy 4th of July. If you want to check out any of our previous episodes, hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. You will see the Arizona Monthly Housing Market Update playlist right at the top. You can't miss it. If you prefer the podcast style on your favorite podcast platform, do a quick search for Arizona Real Estate Radio, and there we are. You can like, subscribe, download all the things, and we will see you next month. All right, guys. Bye.
Everyone.
Bye.